What's going on YouTube? Welcome back to another video from the We Are Investing channel. On this video, we're going to talk about the car rental company Hertz. And just so you guys know, this video is not sponsored by Adidas. I just happened to be wearing an Adidas hat and a sweatshirt at the time of this filming. But hey, I've been thinking, and maybe Adidas was made for stocks and not sports, because it could stand for all day I dream about stocks. It's a tough crowd. Alright, we'll get things rolling. I won't crack any more jokes, I promise you. Now, before getting to Hertz, you know I'm going to be like every other YouTuber, and that's how you hit that subscribe button, ring that bell, smash that like button, and add a comment below. It really goes a long way in helping this channel grow and help me better serve you. So with all that being said, let's get coasting on one of the most famous car rental companies in the world, Hertz. Alright, to get started, let's pull up the Webull platform and take a look at this stock. And if you're not already signed up with Webull and you want to join this awesome platform that's great for mobile trading and investing, consider hitting those links in the video description that will get you 2 free stocks worth up to $1,400 per stock. Webull is a great platform that offers many tools that helps you better invest and make more money. Now looking at the 1-year chart for Hertz, and this is where things get very interesting, and this is why people have their eye on Hertz. And that is because within the last year, Hertz has dropped close to 85%. So therefore, this company has pretty much lost their entire value within the last year. And the car rental business is being hurt very hard by this pandemic, no doubt. People are not traveling, they are not renting cars, and these older cars that Hertz has in their inventory, they're having a hard time selling because people are not buying used cars either. So it's a double whammy on this stock. They're being hit on both fronts, and that is why this stock is down close to 85% on the year. But like I said, people have their eye on this stock because it is down so much and they're hoping for a rebound. But you have to be careful with this company. They are flirting with bankruptcy. Now within the last couple weeks, Hertz has been hiring advisors for bankruptcy. So they're flirting with the idea of filing for Chapter 11 bankruptcy. If they file for that kind of bankruptcy and you're a shareholder, you are most likely not going to get anything for your shares, so you can consider it a complete wash. Owning Hertz stock if they go bankrupt is equivalent to buying a used car that is a lemon. It's essentially worthless and nobody wants that garbage, so you're left holding the bag and crying to mama that you made the wrong decision. Now Hertz today was trending on Google because of what news came out regarding this company. And that news is that Hertz gets lenders forbearance in bid to avert bankruptcy. The company now has until May 22nd to craft a financing strategy, and the car renter won't need to acquire vehicles through the rest of 2020. Now, if Hertz did not get this forbearance and extend that deadline, then they most likely would have filed for bankruptcy today. But now they bought themselves some time to come up with a strategy and hopefully not have to file for bankruptcy within this given year. But with that being said, there is still a lot of risk. I mean a lot of risk with this stock. So although the reward might be high for investing in Hertz, we're talking about 5x returns just to get back to the levels that they were at just a year ago. The risk is also high for this stock because if they file for bankruptcy, which is a high possibility, then you're left holding the bag and your shares are worthless. Now I myself thought this was good news for the company. They extended their deadline and they didn't file for bankruptcy. But the stock market did not take it that way, or at least it did not trade that way, because Hertz was down 16.16% on the day, and that equates to a drop in 58 cents per share. Now there is one company in the car rental industry that I have my eye on and I think is a better buy than Hertz. But before comparing those two companies, I want to talk about one more thing with Hertz. And I think this is an important thing to talk about because when you invest in any company, you're investing in that company's management. If you don't believe in the management, then you might as well not believe in the company and you might as well not invest in them. Now, following the news that Hertz is extending their deadline for bankruptcy, they also released their news that their CEOs and their higher ups are going to get paid like they were pre-pandemic levels. The exact headline of the article is Hertz to restore executive pay amid heavy workload as it looks to dodge a default. Now Hertz on March 26 said senior leaderships were taking a significant reduction in their pay. Now that's a good thing. When things are bad and the company's hurting, the CEO and all the higher ups should reduce their pay to help the situation out, because to be honest, they're getting paid a ton of money to begin with and they can afford to take a 10% 20% reduction to keep the company afloat. And to be completely honest with you, if they get out of this, then they're going to be making more money than they did before, and they're going to stay as higher ups. They're not going to get fired or laid off, and they're going to continue to make these incredible salaries. So it's almost in their best interest to take some pay reduction to help the company out, because they are the people that makes the decisions. If the company doesn't come out on top of things, then they're the first ones to go. So it's good that these executives took a pay cut, but as soon as they get an extension on their deadline before having to file for bankruptcy, they took their pay back. In an 8K filing, Hertz came out and stated, in light of the magnitude of the effort that has already been undertaken and will continue to be necessary from critical employees to operate with reduced resources, the company restored the base salaries of those employed who have voluntarily reduced their salaries as a proactive measure to reduce costs in response to COVID-19's impact on travel demand. To put the 10% reduction in context, Hertz 2020 proxy statement filed with the SEC on March 17th disclosed that Marinello's base salary in 2019 of $1.45 million represented 15.9% of her total compensation of $9.14 million. If Hertz wants to continue to pay all their higher ups a ton of money while they're very low on cash and flirting with bankruptcy, then go ahead, by all means, continue to do so. But I'm going to tell you something. You're probably going to end up filing for bankruptcy, and your shareholders are going to be left holding the bag. So it's safe to say that I'm not very fond of that situation, and I would like to see a different direction from Hertz at this given time. But anyways, let's get into the fundamentals of Hertz. And now we're going to reveal what that second car rental company is that I think is a better buy, and you're going to see why I think it's a better buy. So right now what you're looking at is a spreadsheet that I created that basically shows the fundamentals of Hertz and compares it to that second company that I've been mentioning. And that second company is ticker symbol CAR, and that is the ticker symbol for Avis Budget Group. Now, Avis is pretty much identical to Hertz in the business that they run, and that is the car rental business. Now, Avis, in my personal opinion, is the better buy. And I am not a financial advisor, so you have to do your own research and due diligence before investing or trading in any stock. So let's speed through this spreadsheet because I feel like this video might be already too long, and I don't want to waste too much of your time. The values for the spreadsheet are based off of the most recent 10K for the respective company. Now in 2019, Hertz was not profitable and their earnings per share was negative 50 cents. But on the other hand, Avis Group was profitable and their earnings per share was close to $4. Neither of these companies pays out a dividend. Now the return on equity heavily favors car, with their return on equity being around 56. And Hertz is not profitable, so they have no return on equity, and that is why you see a negative value. The return on assets, ROA, also favors Avis Budget Group with a value of 3.7 compared to 2.5. Now looking at the current debt to equity ratio between the two companies, you can see that Avis Budget Group has a better value, although it's not a good value. You would like to see these values typically over 1, closer to 1.5. But this is a business sector that requires a lot of debt, so that is why these values are typically low. Their current ratio is 0.96 and the current ratio for Hertz is 0.82. Now the valuation is in favor of Hertz. The price to earnings ratio is negative for Hertz because they do not make money, so their earnings is negative. The price to cash flow ratio is 0.6 compared to 0.7. And the price to book value ratio is 1.26 compared to 3.63. Now the growth over the prior year is where Hertz kind of shines, and they had a growth rate in their revenue of 2.89%, while Avis Budget Group only grew by 0.5%. But the net income and the earnings per share heavily favors Avis Budget Group. Net income increased 83%. And earnings per share increased 94%. And I don't know about you, but I care more about operating income than I do revenue, because I want to know how much the company is making. Not how much they're bringing in and how much they're spending, but how much does this company actually make, and are they profitable? To summarize the reasons why I think Avis Budget Group is better than CAR is because, one, they're not flirting with bankruptcy right now. and the company actually came out and stated that they plan to not have to file for bankruptcy for this year, and they think their business is strong enough, they have enough cash to not have to file for bankruptcy. Secondly, I don't like the move Hertz did reinstating their executive pay back to 100% when they have to figure out a business plan by May 22nd or potentially file for bankruptcy. And then lastly, going through the charts, almost everything heavily favors Avis Budget Group. So personally, I just think it's a better buy. Let me know down in the video comments on what you think about both of these companies and if you plan to invest in either of them, and if so, which one. But with all that being said, that wraps up this video. I thank you guys so much for sticking around to the end. And as always, please consider hitting that subscribe button, ringing that bell, smashing that like button, and adding a comment below. It really goes a long way, and I really do appreciate it. So thank you once again, and this is We Are Investing, and together we are invincible. See ya!